Recently, we had an episode on this podcast talking about crucial employees leaving. Now we have a big one. We have Intel CEO Bob Swan announcing his resignation and Pat Gelsinger, the VMware CEO, taking over. In our view, it's definitely good news. We're not too crazy about Pat Gelsinger. I don't think he's a great CEO, in particular not for the kind of company that we like to invest in. Silicon Valley is happy, Wall Street's happy, the stock's up 7%, but I think that's more because change is better than no change. We'll discuss what it means to replace a CEO. We'll discuss what we expect from Pat Gelsinger, and we'll discuss our positioning. This is a Not Even Wrong podcast. It's January 13th, 2021. This is Krim Delco for the day. The fund is up 1.4%. The market is up 30 basis points. For the year, we're up 25%. The market is up 1.5%. We're outperforming by 23.5%. Pat Gelsinger is going to be the new Intel CEO. He's taking over from Bob Swan. Bob Swan has been CEO for about 2 years. His tenure has been, to say it bluntly, a disaster. He wasn't able to get pretty much anything done that he was supposed to get done. Maybe the one thing where he excelled was on the financials. And well, he was a former CFO of Intel and CFO of PayPal. So I guess he has that skill he has, and he's shown that. But Intel doesn't need a financial visit. Intel needs somebody who understands chip design. Intel needs somebody who understands chip manufacturing, who understands where the chip business is going. Intel needs somebody who knows where the puck's going to be in the future, and that's not exactly what Bob Swan was able to do. So we believe that the problem with Bob Swan has been the lack of technical know-how. The lack of technical know-how has created the situation, in our view, and this is just conjecture, where people have been talking to him, his engineers, his subordinates have been giving him information that wasn't accurate, that wasn't maybe properly conversed, and maybe not to the point where they had enough detailed information to actually get stuff done. In our view, that is why we had these delays in the processing technologies, and that is why Intel was falling behind strategically. In a nutshell, we believe that technical know-how actually was important. Sometimes companies can get away with lack of technical know-how, maybe if they're high level enough to actually get stuff done, get their business going. But in the case of Intel in particular, we believe that there had to be a lot more direct communication between engineering, manufacturing, and the CEO. In principle, Intel has always been a kind of a Tesla-style company in a sense that they really were applying new concepts and engineering practices with large impact. This is what Intel has always been in the business of, and I think it kind of drifted away. Intel became a little bit like Oracle, trying to make acquisitions, trying to maybe buy your way into new businesses, buy your way into new sectors and all that stuff. I mean, it's fine, it can work. Oracle tried it, doesn't really work. I mean, you can generate good shareholder returns, don't get me wrong. I think Ellison has done very well for his shareholders and for himself. I think Microsoft has done phenomenal even before Satya Nadella took over. I mean, the returns were okay. They weren't stellar. This wasn't Silicon Valley type 5x type returns. But, if you can do high single digit real returns after tax for investors, that's still very good. So I just want to mention that in context with Bob Swan. I think Swan was had this in the bag. I mean, he was able to deliver returns, but not the kind of returns that people expect. And now let's talk a little bit about Intel. I think Intel has missed a lot of opportunities in the last 3 to 4 years. You can see that in the stock prices of NVIDIA and AMD. The AI opportunity, the opportunity of 5G, the opportunity of intelligent edge, the opportunity of going after new markets, new growth markets. Intel has missed almost all of them, and therefore the stock has been stagnant for the last 3 to 4 years. Not bad. It's, when I say stagnant, it's up maybe in real terms after dividend. They've delivered high single-digit returns. It's not a bad situation, better than many other companies. but not good enough for Silicon Valley, not good enough for a chip company, not good enough for a company that is at the forefront of fundamentally new concepts and engineering practices with large impact. That's definitely not good enough. And we invested in Intel. Fortunately, we've chosen an option strategy, so we limited our risk, and we've certainly not foregone a whole lot of opportunity cost and things like that. I mean, we lost 2.5% to the portfolio, which is as of our NAV last year. This year, that will be something like 0.5% of the NAV. So it's really nothing to talk about. We have reduced our position, we have reduced our exposure, and we're therefore almost neutral here, but we still have some skin in the game, and that's why this episode is here. But no matter what, we can learn from this situation. We can talk about what we actually expect from Intel and maybe use this for future reference. So what do we expect from Intel going forward? Pat Gelsinger, in our view, is not a good CEO. He's an acronym guy. He's let's say, for lack of better words, he doesn't know how to cut to the chase. Acronym guy means he hides behind technical jargon. He hides behind complicated situations. He is not able to just bring it down to the point. So we don't see that necessarily as a good situation for Intel going forward. Again, better than Bob Swan because at least he's technical. So I would say behind all the acronyms, behind all the jargon, behind all these things, there's probably a knowledgeable, sensible engineer with leadership skills, and that's fine. Bob Swan had leadership skills, he had no engineering skills, so here we have both. But I think the acronyms, I'm sorry, but the acronyms are just a big, big red flag. When people use acronyms, particularly when we're talking new fundamentally new concepts and engineering practices, things get confusing, things get complicated, it becomes more difficult to execute. Employees don't really know what are they supposed to do, how are they supposed to do. Things become, it's not good to not be clear, it's not good to cut to the chase. I would say Akram's razor applies to everything, not just the scientific theories. It applies to explanations, communication, it applies to internal communication in companies. And I believe Pat Gelsinger is not that kind of guy. So that is, I would say, the first thing I want to say. Second, his performance with VMware has been pedestrian. He took over in 2012. Since then, the stock has pretty much done almost, I mean, it's done worse than Intel, to be honest. So I don't see why somebody is coming in now to save a company that his own performance has been actually less impressive than the company that he's supposed to save. Now, of course, the situation is very different. Intel has had a very strong position in 2012 and deteriorated in the last couple of years. And VMware was the exact opposite. They had a very weak position in 2012, and they have been able to actually survive. They have been able to actually, at least show some growth, at least show some sort of performance, even though their market was kind of fading away, even though they had a lot of headwind. To some extent, they were victim of their own success. And I don't want to go into details with VMware. We have looked at this company many times in the past. We have never invested in VMware. And the reason we have never invested in VMware is simply because it wasn't clear to us what exactly they're trying to achieve. What was their business? What was the business of VMware? What was their mission? What was their actual problem that they were solving other than virtualizing hardware, which they've done very successfully and which has led to this enormous success that they had in the sort of 2005 to 2010 period. But then after that, after everything got done, the next step into the cloud, into platform as a service, into software as a service, into network as a service, they bought the company. It eludes my brain. I can't remember the name. There is a company that they bought Nicera. So that was a company that was supposed to revolutionize networking. These things just didn't pan out, and therefore I'm a bit wary here. We're just solving the same. We're attacking the problem with the same solution. It's just a different name. This is my conclusion. So I wouldn't increase our position on Intel. In fact, I'm not very happy about this choice at all. I'm happy that they changed the CEO, but I don't think this choice is particularly good. So I wouldn't again, we have a small options position. This is a lottery ticket. In my view, the best situation for Intel is real corporate action, which is a private equity deal, a spin-off of the manufacturing business and the chip business, or a separation, and a focus on getting manufacturing back on track, and a focus also on getting design into the forefront of all these markets that they're going after. So this would be our conclusion here. The corporate action will be the right way. A new CEO is a good step, but the CEO that was chosen, in our view, is not the right CEO. So we don't expect a whole lot of improvement. Will it be enough for us to make money on this position? I doubt it. We have a $90 strike call. We have 12 months. But in this day and age, with the valuation and volatility in the market, there's a possibility that we make some money. We don't have a lot of conviction. This is it. And what is the conclusion here? What is the actual lesson we're learning? Well, first and foremost, if you have a technical problem, you need technical people. And it starts with the top. The fish stinks from the top. The fish heals from the top. It's just the way it works in corporate America and corporations in general. You can't have strong employees and a weak CEO, and you can have a very strong CEO and still weak employees, but definitely not the other way around. So Intel is unfortunately a very good example. I don't think Intel was disrupted by AMD or NVIDIA, by no means. I think Intel just missed the train. I think it was an unforced error that led to whatever happened to Intel. It wasn't the genius of Dr. Su at AMD or Jensen at NVIDIA. It was the other way around. It was an unforced error. This is my conclusion about Intel, and we were wrong on expecting them not to make that error. And then the conclusion is that we have not been able to make money, and we've foregone other interesting chip stocks in the meantime. So we would consider that a loss. But of course, in the grand scheme of things, we have been able to limit our financial loss. And I think we took learnings out of this. And this is what's really important, because this is the second thing I want to say here, which is when you have situations like this, how do you know you're wrong? This is one of the big situations in our lives as fund managers. I mentioned this in previous episodes, the degrees of freedom that we have, and one of them is to choose the right investment. And this is really the only degree of freedom we have. And the degree of freedom is then basically never to sell, or only to sell when you think you're wrong. So how do you know you're wrong? In the case of Intel, we know we're wrong because the board, the management is not able to do the right things. Even now with this new CEO, again, this is not the right thing. So we would be just selling the stock today. But since we have a small options position, we like the risk reward, and maybe it's a bit of inertia on our side, but we're not interested in increasing our position because we know we're wrong. Our thesis that Intel will become able to apply fundamentally new concepts and engineering practices with large impact, that Intel will be able to actually lead in the market. We think that that's not going to happen. So conclusion, new CEO is better than the old CEO because he's technical, but it's not the right guy. The right thing for Intel to do would be corporate action, separate chip and manufacturing business. They're not doing that, so we're not too crazy about the future prospects of Intel. Thank you.